So let's bring in Sarah Robak, contributor for the TD Ameritrade Network. I want to preview some of the earnings, including SFIX, right? The subscription clothing company. The stock is down 56% over the last year. What are some of the things that investors are looking for around this?
Yes, Nicole, I think investors are looking forward to this report today because the stock tends to move pretty drastically in reaction to their earnings. There's also a lot of short interest on this stock headed into this report. And although the stock is up 17% in 2019, we have seen a ton of volatility. In fact, the stock was down 24% in the month of August due to increased competition. Amazon released their subscription service or their personal shopping service early on in the month of August. And the last time we heard from SFIX, investors were very pleased. Their revenue growth was 29% year over year, largely surpassing expectations. They also managed to pull out a small profit, a surprise profit in the quarter, 7 cents a share on earnings per share, where analysts were actually expecting a small loss. But analysts are looking for earnings per share to come in at 4 cents this quarter, revenue to grow 36% year over year in the quarter, largely accelerated due to their launch in the UK. But I think investors are looking forward to seeing how that UK launch is going for them. They launched in May. It's the first time that the company will have expanded internationally. And then because this is the company's fourth quarter report, I think their 2020 guidance is going to be key as well. We saw them continue to up their revenue growth guidance throughout 2019, ending at about 28 to 29% growth. I think that same growth rate is going to please investors in this report, but it's going to depend on how their newer areas have been doing, such as their men's, their children's line, as well as their plus size line as well.
Yeah, it's all about personal styling, I know. But the short interest is an interesting part of this stock. So let's see what happens with the numbers and if the shorts get squeezed on this one. Acuity Brands, right? It's all about indoor and outdoor lighting for commercial buildings and things like that. Stocks had a bumpy year. 1 year is down, year to date it's higher. What are your thoughts on this one?
Yeah, Acuity Brands for the most part has been a laggard over the past few years, Nicole, but the stock is trading up about 16% headed into this report before the bell tomorrow. But their last report did disappoint investors. Although they slightly beat on earnings per share, they did largely miss on revenues, and they issued guidance for this coming quarter that was below analyst expectations. They said that revenue growth year over year would decline slightly when analysts were expecting a small increase year over year in the quarter, but that's largely reflected in these estimates. Earnings per share is expected to actually grow 4%. Revenue is expected to be down 3%, but also considering that it's this company's fourth quarter report as well, I think their 2020 outlook is going to be key. And the thought with this company is that they have been foregoing some sales to really focus on growing that bottom line. They'd been investing in smart building platforms as well as advanced lighting and control systems. They've improved their gross margin consecutively for the past 3 quarters, but I think investors are really going to want to see that continued improvement reflected in their 2020 outlook.
Yeah, gross margin, so important. Sarah Robak, great job. Thank you. Contributor for the TD Ameritrade Network.